If you are still working after the age of 65, or if you recently picked up some part-time hours to help with the cost of living, and you also receive the Guaranteed Income Supplement, this video is for you. Because what many seniors don't realize is that earning extra income, even a small amount, can quietly reduce one of the most important benefits you receive every single month. And the frustrating part is that by the time you notice the change in your bank account, the damage may have already been done. My name is Hostname, and on this channel, we talk about Canadian government benefits in plain, honest language. No confusion, no sales pitch, just the rules as they are. Today, we are going to walk through exactly how the Guaranteed Income Supplement, which most people call the GIS, is affected when you continue to work after 65. We are going to look at the rules, some real-life examples, and most importantly, what you should be watching for so that nothing catches you off guard. Let's start from the beginning, because it's important that everyone watching is on the same page. What is the GIS and who gets it? The Guaranteed Income Supplement is a monthly, tax-free payment from the Government of Canada. It is designed specifically for low-income seniors who are already receiving old age security, which is also called OAS. You cannot receive GIS without OAS, so if you are 65 or older and collecting OAS, and your income is below a certain level, you may qualify for the GIS on top of that. The GIS is income tested. That is the most important phrase in this entire video. Income tested means that the amount you receive depends directly on how much money you earned or received the previous year. The Government of Canada looks at your income from the prior tax year, and based on that number, they calculate how much GIS you are entitled to. This is why working after 65 becomes a sensitive issue for GIS recipients. When you work, you earn income. When you earn income, the government sees that, and your GIS gets reduced accordingly. This is not a punishment. This is not the government being unfair. This is simply how the program was designed. It is meant to supplement the income of seniors who have very little coming in. As your income rises, the supplement goes down. Understanding that this is a built-in rule, not a mistake, is the first step to managing it properly. How the GIS is calculated. The rule explained, simply here is how it works. Explained as simply as possible. Every year, when you file your income tax return with the Canada Revenue Agency, that tax return tells the government how much money you made the previous year. The government uses a specific line on your return, line 23600, which used to be called line 150, to determine your total net income. Based on that number, they recalculate your GIS for the following payment period. The GIS payment year runs from July to June. So the GIS you receive from July of one year to June of the following year is based on your income from the tax year before that. To give you a concrete example, your income from the 2024 tax year, the return you filed in the spring of 2025, determines your GIS from July 2025 through to June 2026. This delay is important. It means that if you worked more hours in 2024 than you expected and your income went up, you may not feel the effect on your GIS until July 2025. By that point, some seniors are confused about why their payment dropped, because they have forgotten about or did not connect the dots back to that extra work they did a year earlier. Now, how much does your GIS drop when your income goes up. The general rule is that for every $2 of employment income above the first $5,000, your GIS is reduced by $1. This is what the government calls the GIS earnings exemption. The first $5,000 of employment income is fully exempt, meaning if you earned $5,000 or less from working, it does not affect your GIS at all. But once you cross that $5,000 threshold, for every additional $2 you earn, $1 comes off your GIS. So if you earned $7,000 from working, only $2,000 of that is counted, and your GIS would be reduced by $1,000 over the year. That works out to roughly $83 less per month. This is where many seniors are caught off guard. They think, I only worked a few shifts a week. It is not that much money. But when you add it up over 12 months, the reduction to your GIS can be meaningful. Real-life example, Margaret's situation. Let me walk you through a real-life type of scenario, so this becomes clear. Margaret is 68 years old. She lives alone in Ontario. She receives OAS and GIS every month, and her total income from those two benefits is her main source of support. She decides to take on a part-time cashier job at a local grocery store, 3 shifts a week, because she wants some independence, and the grocery bills have gone up. Over the course of 2024, she earns $9,000 from that job. Now, the first $5,000 is exempt. The remaining $4,000 is what counts. Since the GIS is reduced by 50 cents for every dollar of counted income, which is the same as saying $1 for every $2 earned, her GIS is reduced by $2,000 for the year. That is approximately $167 less per month, starting in July of the following year. Margaret notices in August that her GIS deposit is smaller than before. She calls her daughter, who checks the account, and neither of them can figure out why it changed. They assume it is an error, but it is not an error. It is the automatic recalculation based on her 2024 tax return. This is exactly the kind of situation we want you to be prepared for before it happens, not after. Real-life example, Robert's situation. Let's look at a second example, a slightly different situation. Robert is 71 and still does occasional contract work as a handyman. His income varies from year to year. In 2023, he earned $3,000, and his GIS was not affected at all because he stayed under the $5,000 exemption. In 2024, he had a busy season and earned $11,000. He thought nothing of it because he needed the money. When July 2025 arrives, his GIS drops noticeably. He did not expect this because the previous year it had been fine. The problem is, he did not track how his income was climbing, and he did not anticipate that the $6,000 above the exemption threshold would translate into a $3,000 annual reduction in his GIS, or $250 less per month. Robert's situation is common among seniors who do occasional or seasonal work, where income is unpredictable. The lesson here is that any year you work more than usual, you should be mentally prepared for a GIS adjustment the following July. What counts as income for GIS purposes? This is a question we hear often. What exactly counts as income when the government is calculating your GIS? Employment income, meaning wages or salary from a job, counts, and it is the type of income that benefits from the $5,000 exemption we discussed. Self-employment income also counts, though the way it is treated can differ slightly, so if you are doing contract or freelance work, it is worth speaking with someone at Service Canada or CRA for your specific situation. CPP payments count as income. OAS itself counts as income. Pension income from a former employer counts. RRSP withdrawals count. RRIF withdrawals count. What does not count toward GIS income? The GIS payment itself is tax-free and is not counted back as income. Your principal residence is not income. The GST credit is not income. The key takeaway is that nearly all forms of money coming in will factor into your net income on line 23,600, and that number is what drives your GIS calculation. The July recalculation. Why it matters so much. We want to spend a moment on this because it is one of the most misunderstood aspects of the GIS. Every July, the Government of Canada does a full recalculation of your GIS based on your most recently filed tax return. This happens automatically. You do not apply for it. You do not request it. It just happens. If your income went up from the prior year, your GIS goes down starting in July. If your income went down, for example, if you stopped working, your GIS goes up starting in July, assuming you filed your taxes on time. This is why filing your taxes on time every single year is absolutely critical for GIS recipients. If you do not file, the government cannot recalculate your GIS, and your payments can be interrupted or held at incorrect levels. The deadline to file is April 30th each year. Even if you owe no tax, even if your income is very low, file your return. It protects your GIS. If you miss the deadline and your GIS gets interrupted or reduced because of a late filing, you can get it restored. But there may be a delay, and the process requires contacting Service Canada directly. It is far easier to just file on time. What to watch for. A practical checklist. Now let's talk about what you should actually be doing and watching for, especially if you are working or thinking about working after 65. The first thing to do is track your annual employment income. Keep a simple note, even on paper, of how much you have earned from working each month. Add it up as you go. Once you get close to or past the $5,000 mark in a given year, know that any additional income will start reducing your GIS the following July. Second, check your My Service Canada account online. This is a free account at canada.ca where you can see your OAS and GIS payment details, check what income information the government has on file for you, and view your payment history. If you have not set this up, ask a family member or a trusted person at your local Service Canada office to help you. It is one of the most powerful tools available to you as a benefit recipient. Third, review your Notice of Assessment from CRA after you file your taxes. This document confirms what income the government recorded for you that year. Look at line 23,600. That is the number that drives your GIS. If that number seems higher than you expected, it is worth understanding why before July arrives. Fourth, if your income drops significantly, say you stop working or your hours are cut, you do not have to wait until the next July recalculation. There is a provision called the Current Year Income option, where you can ask Service Canada to use your estimated current year income instead of the prior year's tax return. This is especially useful if you retired mid-year or experienced a significant drop in earnings. You would need to contact Service Canada and provide an estimate of your current year income to trigger this. Fifth, watch your bank account every July. make a note each year. When July comes, compare your GIS deposit to the previous month. If it changed, the reason is almost always the annual recalculation. Do not assume it is an error without first checking your prior year income. The common mistakes and misunderstandings. Let's talk about some of the most common mistakes seniors make in this area, because knowing what to avoid is just as important as knowing the rules. The most common mistake is simply not knowing that the GIS is income tested at all. Many seniors assume GIS is a flat benefit that you receive based on your age and OAS status alone. That is not the case. Your income level actively determines how much you get. Another common mistake is forgetting about the 1-year delay. Seniors sometimes work extra hours in a given year, and because nothing changes right away, they think it had no effect. Then July comes, and they are blindsided. The delay between earning and the impact on GIS is built into the system, and it is easy to lose track of. A third mistake is failing to report a drop in income. If you stop working or your income drops significantly, you have the right to report that to Service Canada and potentially have your GIS increased sooner than the next July. Many seniors do not know this option exists and simply wait an entire year for the natural recalculation. A fourth mistake, and this one is important, is not filing taxes because you think you do not owe any money. If your income is low enough that you do not owe tax, you might be tempted to skip filing. But for GIS recipients, not filing is extremely harmful. Service Canada relies on your tax return to confirm your income and pay you the right amount. Skipping a year can cause your GIS to be reduced or stopped entirely. Finally, some seniors mistakenly include non-taxable income in their estimates and get confused. For example, gifts from family are not income. The GIS itself is not income. Your principal residence is not income. These do not affect your GIS. What about OAS? Does working affect that too? This is a question that comes up frequently. Does working after 65 affect your OAS? The short answer is, OAS is not directly reduced the same way GIS is. OAS is a flat benefit based on how long you have lived in Canada, and the amount is not affected by most forms of income. However, there is something called the OAS clawback, which the government officially calls the OAS recovery tax. This applies to higher income seniors. In 2025, if your net income exceeds a threshold, roughly around $90,000, your OAS begins to be reduced. This is very unlikely to affect the audience we are speaking to today, which is primarily low to middle-income seniors who are doing part-time or occasional work. But it is worth knowing the term exists so you are not confused if you ever hear it. For most seniors watching this video, working part-time or seasonally will not affect your OAS directly. It will, however, affect your GIS, as we have been discussing. Looking ahead, what happens next? If you are currently working and receiving GIS, here is a simple way to think about the road ahead. Each year, your GIS will be recalculated in July based on what you earned the year before. If your income stays relatively stable from year to year, your GIS will also be relatively stable. If your income goes up, expect a reduction the following July. If your income drops, for example when you fully retire, expect your GIS to increase the following July or sooner if you use the current year income option we discussed. The GIS maximum amounts are also adjusted quarterly by the government based on the Consumer Price Index, which is a measure of inflation. So even when your GIS is being reduced due to income, the base rates themselves may go up slightly over time. These adjustments happen in January, April, July, and October each year. This means that over time, even if your income stays the same, your GIS may edge slightly upward due to indexing. It will not make up for the full reduction caused by employment income, but it does mean the government is acknowledging the rising cost of living. To calm summary, let us bring this all together. If you are working after 65 and receiving the guaranteed income supplement, the most important thing to understand is that the GIS is income tested. The more you earn, the less you receive. This is not a flaw or an error. It is the way the program was designed. The first $5,000 of employment income each year is fully exempt, meaning it will not affect your GIS at all. Beyond that, for every $2 you earn, your GIS is reduced by $1. The reduction takes effect the following July, based on your prior year tax return. The best things you can do are track your annual earnings, file your taxes on time every year, review your notice of assessment, and check your My Service Canada account regularly. If your income drops significantly, contact Service Canada about the current year income option. You do not have to wait a full year for your GIS to reflect your new reality. And above all, do not panic when you see a change in July. Understand what caused it. Trace it back to your prior year income. And if something still does not add up, call Service Canada at 1-800-277-9914. They are there to help you. Closing and engagement prompt. I want to ask you something before you go. Are you currently working part-time or occasionally and also receiving the GIS? Or maybe you recently retired and you are wondering how your final year of income might affect what comes next. If so, leave a comment below. Tell us your situation, even in general terms, and we will do our best to address it in an upcoming video. And if this video helped you understand your benefits a little more clearly, please consider subscribing to Retirement Path Canada. We release regular videos on CPP, OAS, GIS, and all the rules that affect Canadian seniors. Our goal is simple: to make sure you always know where you stand with your benefits. Thank you for watching. Take care of yourself, and we will see you in the next one.